Yeah, but I hope you guys saw my live stream yesterday with the clips. It was crazy. It was awesome. It got dark super fast, like within 3 minutes, it was totally dark. And then, it was totally dark for maybe 3 or 4 minutes, and then it started getting light, and then about another 3 minutes later, it was crazy. All right, so I'm gonna turn off that one. All right, guys. So yeah, let's do this end of day rundown on these Defiance funds. Let's see how we closed out the day. I noticed we had a face ripper at the end of the day. Did you guys see this face ripper? Check this out, or check this out. I mean, I'm sure you guys have seen it, but it was going for a full loss on two of the three funds, I believe, and it wasn't for the last hour. Probably some Fed governor said something. You guys are going to tell me in the comments. Once again, I don't know. I do know it's good for all three of these. Well, all four of them, really. It's SPY T always does well. It was close to the worst case scenario for SPY T, if there is one. It's hard to say. I guess it's the second worst case scenario for SPY T. The worst case scenario for SPY T is just a big black swan because it's a long fund, just like any other ETF. That'd be bad. But the second worst case scenario for the SPY T is a market that goes up, but doesn't go up that much. Because the hedge doesn't really pay and you still get killed on the short. You realize a loss. Now, granted, your SPY shares appreciate, but other things being equal, you want your SPY shares to appreciate a lot more. This is kind of like the valley of death. The worst spot would be right at the top line for the SPY T, just on a relative basis. It still makes money, but that's where it makes the least compared to the index, is at that point. It's its own little valley of death. But anyway, it's still a great system. All right. So anyway, look at this one, but look at JEPI. JEPI finished right at the max profit line today. So let's look over here and see what my spreadsheet says. So here's JEPI. All right. They sold options for $15.95 on average. They really did two trades. I just always average them and make it easier. The options expired 9 cents in the money. That's where that, so they probably had to pay a little bit to get out of it, a couple $1,000s, but they realized almost the entire 419,000 they were going for. That was a 5 cents a share winner. It makes the dividend estimate go to 45 cents. Or I think that's what it was this morning. It didn't go anywhere. See what else we have to look at. Let's do this. Let's see if the face ripper helped the NASDAQ too. And I'm sure it did. It probably started in the NASDAQ. I bet somebody came on and said, one of the Fed governors probably said something dovish. Boy, look at that. And right before that, look at and there's a huge tail on this candle right here, meaning that the price was down here for a while and it was rejected. I mean, it's a rejection tail, but anyway, that's a gigantic range that this thing was trading in. There must have been news out. I need to turn on CNBC more often. Anyway, I just don't have time for it. But it's max profit for this fund, because anywhere at the top line or above is the max profit. This fund doesn't have any equivalent of SPY T yet, so we can't look at any kind of one-day call spread. The SPY T deal is really sweet. Even though it said it's worse on a relative basis at that top line, has the worst outcome versus the SPY on a relative basis. It still has a good outcome versus a lot of other strategies you could do. It's not a bad fund in the way it works, it's a call spread and you're selling a call spread. So calls are bullish, but when you sell calls, that's bearish. So it's a bearish spread. So any down day, if the market goes down 1 cent or $100, that the spread, this red box right here, is a full profit. So it's kind of like a reverse profit box, because these other profit boxes, if you make money if you expire in them or above them. This profit box, you make money if you expire in them or below. Below's more optimum. You want lower the better in any event. Okay. But it's a great strategy. Let's look over here and see how IWMY did. Hope you guys can hear me. I got the microphone right here. All right. So IWMYs, these guys trade Russell options. And look at this chart while it's taking time for everything else to come up with. That's a wedge. That's a chart pattern, guys call that a wedge. I mean, that's just comes to a point right here. And we're right on the point. I can identify one when I see it, but I've never known how to play it. I don't know long or short, neither. Sometimes you wait and see which way it goes, but lots of times the first way it goes is a fake out and may look like it's breaking up, but then boom, that's a huge fake out. And then overnight it slams the other way and then closes in 3 days, 5% lower. It happens all the time. These markets, the indexes especially, are just super whipsawy, and they're designed to cost the retail trader money. But anyway, they definitely don't give away free money in index trading. But in high yield option and high yield trading, they darn sure do, because that was a full profit also. So that's really nice. That is extremely nice. So we'll go over here to IWMY. So I'm going to call the JEPI a full profit, right? That's basically, it's close enough. It was I think, $2,000 from being a full profit on like 479,000. So we'll give them credit for the full profit. So I'm going to say 3 of 3, even though it wasn't technically 3 of 3. That's what I'm going to give them credit for. So these guys were going from original max of 878,000. That's a daily yield, or I call it a capture percentage of 55. This brings them to 2 cents a share. This was a huge win for IWMY today. They won 9 cents a share, or made 9 cents a share. It's a big day for these guys, though. I mean, just a few days ago, they were down 35 cents a share. So these managers are on fire. They're catching plenty of extrinsic. You can see the extrinsic per share is 38 cents thus far in the month. And we've had, 8 days. So you extrapolate that over the course of a 21, 22-day month, whatever it has. Some months have 20, some months have 21 days, business days. And then this is what you get. And I also take 90%. That's why it says it's 90% of the extrinsic projected over a month to the next distribution day. So we'll see. We'll see. 2 of my estimates last month were within a nickel, and one of them missed by a dime. No, one of them missed by way more than a dime. Anyway, I forgot about that. I've kind of suppressed that memory. Okay, so SpyT. SpyT's a fascinating fund here. So today, these guys, I showed you the red box. They sold the 5205 call for 1340, and they bought the 5220. It's a 15-point wide spread. So that means their max risk is 15 points less whatever they get for the spread. Well, 13 minus 6, they got, I think, 6 something for the spread. In any event, 7. So that makes the risk 8 something or 7 something, almost 8, basically. Okay, so it's about a 1-for-1. This is the deal they do every day. The reason I was saying what would be a worst case scenario is SpyT has 2 components. One component, and it's 97% of the fund, is just long SPY shares, and I have it right here, 17,180. Some of them are IVV shares, but it's the same thing. It's different. It's a different company that runs them. It's, I think BlackRock. In any event, but it's basically long exposure to the S&P 500. They don't, that's all it is, which is great. So that's 97% of the fund. So, ideally, you just want this high of possible of a price. The spread gives you a little help and hedges you a little bit on the downside, and makes sure they can pay 20% dividend, which is nice. It's least advantageous. Let me say that if it goes right to the bought strike, you sold the 52.05 and you bought the 52.20 in this spread scenario. So if the market ends at 52.20, that's the least optimum scenario for you, because for one thing, the SPY's not at 52.20. The SPY's not up that much from yesterday's close. You want the SPY to be up way more than that. So that's the area where the SPY's not up that much, and your hedge hasn't kicked in that much. That's where the spread is that's your max liability right there, is at 52.20. Now it's still profitable for you, because for the market to be at 52.20, it means it has to move up. I think it was around 5,000 when the spread was put on. So it means it has to move 20 points. Which is fine. So you're going to be up money on that part of it. All right, so that's that. TLT, oh my gosh, let's see what's going on with TLT. I'm sure they're still in the valley of death. I was just going to check out Tress. I never look at Tress and just check out Tress's price. These guys trade TLT options and they do it. So it's 17. But they've only been around for a month or something. They're already down 10%. Anyway, this kind of fund's going to be feast or famine, and it has been famine so far. Outside of the nice dividend they've been paying, but that's a given. But the overall investment, it's been nice to get a dividend, granted, but the overall investment has definitely been a famine. Oh gosh, I left Jax inside and now he wants to come outside. I should have got him out here before I started the live stream, but I was afraid, actually. There's the Amazon guy was going up and down the street. I didn't want Jax to chase him or scare him or something. Okay, so let's look at some of these single names. Here we have Coinbase. The guys that Coney, the high yield fund Coney, they trade Coinbase options. They were in trouble. I love this. This shows you how the prayer method. I always talk about different methods of trading, different trading systems, and the prayer trading system worked, because that's what I was saying. I was saying sometimes when you're trading calls, you sold an option and your strike gets run through. That means you're going to be losing money when your strike gets run through. But you can always, so you can roll the option, you can cover that option, you can sell another one in a further week out. There's all kinds of defensive mechanisms you can do. And I was joking one time, I said, or you can just pray. But in other words, you can just sit on your hands, because sometimes the markets go up, they go down. It might come right back. And that's what had happened in this case. Even though it was Monday morning, they sold this strike when it was Friday afternoon. But then by Monday morning, the first bar was already through it. But then later on in the morning, it was back on the other side, but then it was back through it. Now we're on this side. In any event, these guys are in good shape right here as far as this. They're collecting all kinds of theta decay. And in this case, doing nothing worked. Sometimes you can, and I do this, and I over adjust my positions. And then I end up, even if I make anything, I'm so hedged, I lose on on trading cost and commissions. And I may not lose any money, but sometimes I make it where I have a trade that can't really lose any, but it can't make any either. I'm expert at coming up with option strategies like that. I need Charles to help me with some better strategies. All right. Well, here's NVIDIA. They've just had a bear market, so their strike's in good shape. One of these, I think it was think it was this stock actually had a one more in their ladder. They had a 4 strike ladder, and I forgot to write down what strike it was. Anyway, it was one that was close to one that I already had anyway. It sounds like it's thundering right now. I wonder if it's getting ready to start raining again. It's just been pouring here all day. No, it wasn't this one. It was actually Tesla added a. I saw on Retire on Dividends broadcast that Tesla managers added a strike. Or was it these guys? No, I think it was actually these guys. There's another strike in here. There's a strike like at 1710 or something. There's another one, but it's right in here. So I figured and I was in a hurry. So anyway, my apologies. I just want to see generally how these guys are doing and how their strategy of where they write these. They're going to make full profit on all their options. If they would have known the market was going to be soft, which they don't know, they could have run the options a little bit closer, to the money and brought in more premium. And that's what you would do in hindsight. If you knew it was going to be soft, you would write them as low as possible. But anyway, you never know that. So at the time you're doing it, you want to write them out as far as possible, that if you do have a hot market, there's enough room in there that you realize some of the capital gain. That's what helps you that's what helps your NAV from decaying and it doesn't seem to do it as bad I mean, it decays on everything, but doesn't seem to do it as bad on some of these single name stock funds. And just because the single name stock funds can go up further and faster, and they can offset the decay, make it where you have no net decay, or it looks like you don't anyway. All right. So, I was trying to check comments and see if I have any yet, but comments aren't a big deal. Let's look at the buffer report, I guess, since we're here. Now, this is impressive on the 30-day. That a lot of these are ahead of the index, or a few of them, the good ones. Triple QI is a great one. I've always said that. I've always said JEPQ is the gold standard. But look over here at IWMY. This other thing was the market didn't go anywhere. So it makes it easy when the market's 2% on the month, then these strategies that monetize time decay should be beating them, should be killing them. Look at YMAG, probably best performance over this rolling 30-day period. But YMAX had a nice outperformance too. Triple QI, I never talk about them, but I need to start. There's just so many choices out there. Poppy, look at old Poppy. Anyway, that's past 30 days. Let's zoom in a little bit. Let's zoom in a little bit. This is just this month only. This is since like the last day of last month. So, yeah, this is April only, basically. Yeah, April, single stocks. You can kind of see the story of early April has been the former, high flyers, Misty and Vidi, Coney, pulling back. And usually and Tesla's kind of bucking the trend, going the other direction. For the past several months, these have been going up every day, and Tesla's, has been a sore subject. But also, we were talking today about revenge of the boomer stocks, and it looks like in the nearer term time frames, it's more the boomer stocks like ExxonMobil and J.P. Morgan and Disney and whatever. All right, so yeah, TSLP looks really good. I mean, there's nothing wrong with that fund. Anyway, it's nice to see TSLP and TSLY for once get a little good news. All right, let's see what else we got. Weekly index. I haven't checked. I haven't gone over these yet to make sure these are accurate, but they should be, though. I'm just trying to think about the ex-dividend date on the Defiance was during the time period that this chart is. So I made an adjustment. Yeah. So these ought to be right. But yeah, Defiance is just murdering it. and YBTC, of course. All right, more single names. I think this is the same chart as before. So some other ones, well, that we didn't really talk about. I guess the same usual suspects, Maxi and YBTC. And other than that, really, and Tesla and TSLP, it's been kind of a slim pickings, actually. Early April has been. But on the 30-day, on the longer time frame, lots of nice performance and outperformance. All right. So let's see. What else should I show you guys? I wish I could trying to think here. I need to get an easier way to check for messages. I know you guys are probably messaging me. I mean, here's the video. Comments are not supported on private videos. I know this in private. Anyway, whatever. If it's private, whatever. I'll go turn it off and turn it back on as public. At least people will be able to see this later. Anyway, let's take a look at the charts here. All right, let's see what's going on with Bitcoin. Let's look at Bitcoin futures. Down 3.5%. Yeah, it looks like you could just start pouring at any time. I mean, a lot of the charts kind of look like this chart. I'm going to pull back and look at a daily perspective, and let's turn on some Bollinger Bands and look at some momentum and see what we got going on here. Sorry about that. Okie dokie. All right. Well, on Bollinger Bands, okay. Well, you can see it was the mother of all trending signals back here in February. Oh my gosh, dude, 45,000. Anyway, since then, it's just been continuation after continuation. I was thinking head and shoulders top, but now that it's not looking like that, because that was before this stuff developed over here. All this. So, so then I was thinking wedge, and I could kind of still go with the wedge case, and it looks like they violated the wedge to the top, but it looks like that may have been a fake out. Let me know what you guys think. If comments are going, obviously, I'll read them later. And but so what I was thinking earlier was here. And here. But anyway, you see these lots of times. The first break is a fake. First break's a fake. I don't know, I just made that up. Well, anyway, and that's kind of what happened here. You had a daily bar that closed out, so you would have thought you would be, good to go long, and then the next bar is a reversal. But this bar, today's bar, may have been the fake out. Maybe the smart money bought the close, and then it'll be up tomorrow. I love looking at all this stuff. It's interesting. But this Bitcoin's really coming to a head right here. And this will make a big future direction on the market because so many of the top stocks are related. But Bitcoin's become a commodity like oil or whatever. It also goes up and down with the inflation and with the broader economy. So it's healthy generally to have higher prices here. Bitcoin's the new gold or whatever they say. All right. Well, let's see. What else can we check in on? Check in on old Feppy. See how Feppy's doing. All right, so old Feppy here. You want to talk about the mother of all trending signals down here, but in any event, This was the mother of all fake outs too. What was that? February? That was that February 21st. Oh my gosh. I mean, anyway, within like 5 or 6 days, it's out of the Bollinger Bands on the other side. But that was a fake out. Well, I hate chop. I love trends and I hate chop, but in any event, this has just been chop, chop city here. But still one of the best ETFs of the year. I'm not knocking it. Probably any pullbacks are viable, and probably smart money people probably bought the pullback here the past couple of days. I don't know. I'm just let's look at Vivix. I asked Jay about Vivix. I'm fascinated with Vivix. Under 80, some kind of key. Under 80, some kind of barrier, or not a barrier, some kind of reflexive point where something happens that actually I think that you don't think. I probably should go get that darn dog. Vivix, though, really, there's nothing to see here. Sometimes it's fun to look at a Vivix to VIX ratio, but I'll do that some other time. These dogs are going to wear me out until I. Oh yeah, earlier I was talking about how IVV was the same thing, and I think it is anyway, right? I mean, as SPY, it's just BlackRock's, that's iShares version of it. Yeah, 521. Yeah, that if not, it's close. But so SPY T now has some of these shares along with some SPY shares, and the SPY spider was State Street, right? Yeah, State Street. All right, guys. Well, I'm gonna let you go. It's been fun. Looks like it's gonna rain here, maybe. It smells like it too, and it's kind of getting it's kind of a little chill just hit the air, and it kind of it smells like it. I can smell water in the air. I mean, it's gonna rain. It's gonna pour here in a second, probably.